Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 29 weeks ago here, and every opportunity since, I have said, and I quote, "The only other thing to bear in mind is not here on this daily chart but in Chicago soybean meal." And that is the well-highlighted annual key reversal down we saw there for 2023. Not directly related here, but not worth ignoring either. 2 weeks ago I said, and I quote, "I think with us being now in the second month of the new year of 2025, I should now set aside this as the world and my charts have moved on, and there are more recent and more interesting features to discuss." End of quote. Now, while I think this is still true, this original thought from the end of 2023, well, it still also haunts me today. Nevertheless, there had been three main features on this daily chart that I brought up 3 weeks ago. One of these is still worthy of discussion. It is a big picture item, and that was the potential we had for a very large July 2024 to-date double bottom pattern. The last 3 weeks, especially this week, has killed off this idea. Instead, I'd replace it with the possibility of the July 2024 to date action becoming a rectangle pattern, primarily or currently between 950 to 1093, and it's highlighted in bright pink on my daily chart. The top side for this pattern is still capped by the 50% Fibonacci of the May to August 2024 move at 1098 and the 61.8% absolute Fibonacci line at 1106. Separate to this, I brought up last week the idea of a February-based descending wedge pattern, highlighted in bright green on my daily chart. My comment from last week on this included, and I quote, "A break from this pattern, when it comes, would be very interesting, as if it were higher than the 50% and the 61.8% absolute Fibonacci line overhead would be under threat, whilst the break lower would run into the congestion seen mainly between mid-October 2024 to mid-January 2025 in the 990 zone, assuming of course it pushes past the dark blue neckline extension, that's currently at 1019, of the late July to late August reverse head and shoulders pattern." End of quote. Well, during this week, we had a break lower and prices dropped down to 991, easily within the influence of what I had said was the, and I quote, "the congestion seen mainly between mid-October 24 to mid-January 25 in the 990 zone." End of quote. So where has this left us? Well, it just leaves us with the large July 2024 to date rectangle pattern right now. Nothing else. Chicago soybean meal. The main recent pattern driver here in this market had been and still is the dark blue May to October 2024 bearish shift pitchfork. The market is running a little underneath the overhead upper time, currently at 311 even. This pattern had previously been breached on the upside in January, but it had not been broken and had also been reinforced by a congestion area further overhead between 323.30 and 326.90. As well as a declining long moving average, currently at 317.5, along with the nuisance value, I suppose, of the bright red trendline extensions of the July to September 2021 descending wedge pattern, that's currently at 320 even. Plus, most recently, we have seen the current bearish presence of the declining mauve medium moving average, currently at 302.60, evident since early February. The reactionary move lower after testing the upside during late January and early February saw prices drop down below the support from this mauve medium moving average, and it became resistance. We also have the nearby rising green short medium moving average, currently at 306.30, but its impact has seemingly evaporated. Now, 3 weeks ago we saw prices drop down below the interesting bright green mid-December 2024 to early February 2025 lower bull channel come lower trend line to an ascending wedge pattern, that's currently at 317.5. And also the purple lopsided head and shoulders top pattern neckline, currently at 316.30. And I quote, "sets up some opportunities on the downside for an ascending wedge pattern. There's a primary target X down in the 293.80 zone and a secondary harder to reach target X1 down in the 265-60 zone. For a head and shoulders top pattern, we have a primary target X2 down in the 293.30 zone and a secondary hard to reach target X3 down in the 380.10 zone, end of quote. I further added, and I quote, looking at the targets, the primary targets X and X2 are doable, but still within the congestion seen back in April to August 2020 between 282 even to 300. And again, most recently in November and December last year. However, the secondary targets for both are below this congestion, and thus harder, much harder to attain, end of quote. The only thing I would add to these comments this week would be to add on reflection an interim target X4 in the 285.30 zone below for the ascending wedge pattern. Well, this week we have seen targets X and X2 both achieved, and yesterday and so far today a reactionary move back up. Now we haven't set this up yet, but prices have climbed up enough to raise the question as to whether the reaction back up might form a weekly key reversal up. To do this, prices would need to this week push up over 305.50, which we have not managed with that high of 305.40 at the moment. We need to push up over 305.50. You know, sometimes people play the exact numbers. And then close on Friday night, that's tomorrow, over 303.90. Should this happen, that would most likely retire both secondary targets below as well as the new interim target. Finally, this commentary would not be complete without my discussing the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024 and also resonates now into 2025. And that is the annual key reversal seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've highlighted now for 89 weeks, so coming up for nearly 2 years. And I quote, I now only need to remind you once again of my words when I pointed out the Chicago soybean meal was about to make that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023. I've been living in the shadow of this pattern ever since, end of quote. I have also added ever since, and I quote, if there is only one thing to take away from my musings, let it have been those words, end of quote. These last few weeks have shown that the shadow cast by that supremely significant pattern so long ago still darkens the skyline of this market. Chicago soybean oil. At the end of last year, I drew what I called, and I quote, a new prospective dark blue bullish Andrews pitchfork, the mid-August to late November move, end of quote. I've since finessed this into a mid-August to late December 2024 dark blue bullish Andrews pitchfork. This week, for the first time, prices have punched down below the lower time, and that's currently at 43.41. As yet, the market has not established itself underneath this dark blue bullish Andrews pitchfork, though it is trying to right now. This is not all, and I've been in the past week somewhat loath to mention this, but that is not the only bullish pitchfork for this move, as we also have a bright red, shallower bullish shift pitchfork operational for the same move. The market is right now in between the overhead bright red middle time, currently at 45.37, and the bright red lower time below, currently 40.26. For this pattern, it has been my small quandary that I do not like having, as in the case here, both the bullish Andrews and the bullish shift pitchforks for the same move on the same chart at the same time. One should morph or finesse into the other, usually. Perhaps we are finally seeing this today. Now, I had laid out in recent weeks an immediate open question here. Is the action since early January today, is it a double, now triple top, or a bullish halfway hesitation, or something else entirely? Last week I said that, and I quote, this week it is increasingly looking like we are setting up to make a triple top, though it is not certain by any means, end of quote. Well, we did indeed set up a lopsided triple top, though I grant you some may see it as a bull channel or even an ascending wedge pattern. Nevertheless, prices broke down from this pattern last week, and this week they have reached down to the primary and secondary targets for all such patterns. Now, 2 weeks ago I spoke about how there was the likely development of a bullish pattern. It was to look at the whole of the late June 2024 to date action as a possible really big double bottom. This week, well, this week's fall has killed off this idea completely. Thus, we are seemingly left with the main pattern development in the futures being possibly just a bright red, shallow, bullish shift pitchfork.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.